Good morning, everyone, and welcome back to Morning Markets. Many thanks for joining us. Today, I wanted to focus in on just some of the movements in the bond market yesterday and then some economic data that we've had overnight. Just looking back then at yesterday and how did sovereign bond markets perform, quite interesting to see that yields have continued to move in across developed markets. The US in a further couple of basis points to 91 basis points yield, similar in Germany, similar in the UK. It's also worth noting that the move was also very much evident across Europe, where we saw sovereign yields move in over the course of the day. I think a large part of the move that we're seeing in sovereign bonds, and particularly in the European sovereign bonds, is being driven by expectations of what we are going to hear from the ECB tomorrow. As we've mentioned, the market is expecting an increase in their bond purchase program. Started to get some sense of the scale of that from market participants. Being suggested that the market is expecting a further euro 500 billion of bond purchases to come through, and that's definitely having an impact on sovereign bond yields across Europe, as that will be the natural destination, i.e. the purchasing of those bonds by the ECB to keep borrowing costs at a relatively low level. So that's something that we will report back on once we get that detail from the ECB tomorrow. Looking at other asset classes, another day of politics and how that was really impacting sentiment, but also the direction of asset classes. And we think about currencies, and I'll come on and talk about the US market as well in a moment. But just looking at the currency market yesterday, very much about sterling and the politics associated with sterling. So as the day moved on, we did see sterling move marginally better. And a large part of that came around as the implementation of the withdrawal agreement and certain aspects in relation to Northern Ireland. And that did generate a positive reaction. The one outstanding component there is obviously the trade talks. And we've got Boris Johnson going to Brussels this evening for further discussions in that regard. And that is really at the crux of the issue. We need to see a resolution there, and that will primarily determine how sterling is going to really trade over the next number of weeks and the initial reaction that we'll get there. So we'll continue to monitor that and see where that goes. In politics in the US, I think also worth just touching on, because there does seem to be some movement there towards reaching an agreement around some form of fiscal support, with some Republican politicians effectively suggesting that they could set aside some of the more contentious areas in order to move a bill through over the coming days. Now, clearly, there's quite a bit of tension then in markets at this point in time around the politics, both around Brexit trade discussions, but also around this fiscal support package in the US that's balancing against the other side, which is the positive news that we're seeing at an economic level, positive news on vaccines, but also just the rising COVID infection rates and hospitalizations that we're seeing primarily in some parts of Europe, but also in North America. So that is that tension that's really existing in asset markets. Just looking at how overall equity markets performed yesterday, Europe, we didn't really see much of a change overall. US markets continue to push on a little bit better. That, I think, is a reflection of the news flow during US hours around where the fiscal support package could be. So we saw the S&P up a further 30 basis points and the NASDAQ up 50, both touching further all-time highs as a result of that. I think the other thing just to touch on this morning is some economic data that we've been seeing overnight, looking at consumer prices, inflation in China, and we saw a fall in consumer prices in China of 0.5% year on year. A little bit surprising, but it may be somewhat due to the base year effects from last year when we had very strong food price inflation in China and that normalizing out. So we'll just have to look at over the coming months to see how that impact washes out of the data and what actual CPI is. The other side of that, producer prices in China, yes, they remain negative, falling 1.5% year on year. But that's quite an improvement from the deflation that we've been seeing in consumer prices. So looking at that going forward, it looks as if the strength in the economic recovery is coming through, and that's allowing prices to increase ever so slightly, but in a positive direction if we look at it on a month-on-month basis. The other area of, I think, real interest today and a bit of a surprise is what we saw from Japan in terms of machinery orders, where we saw growth of 2.8% year on year and some 17% month on month, very much ahead of expectations, but speaks to the economic recovery, the close linkages that Japan has into global trade in a very similar way to South Korea and Taiwan, where we've seen strength in their economic data points over the past couple of months as well. Those markets provided strong leadership to Asian equity markets overnight, with Japan's Nikkei up about 1.3%, and the South Korean market up about 1.9% as well. So positive trends there, and that's likely to feed into positive opening for UK, Europe and US markets today. Many thanks for joining us, and I look forward to speaking to you again tomorrow.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.